Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good weekend, all. Ira Epstein of Linn Associates with your weekend edition of your financial market wrap-up. And this wrap-up is for Friday, the 21st of December, 2018. We're about 3:20 p.m. Central Standard Time. Yes, the markets trade until 4 p.m. today, but the settlement prices will be right what you're looking at in stock indices for the day. And my gosh, before I go too far, I want to wish one and all a Merry Christmas and a Happy New Year. If you would have asked me in September that we were going to have the worst December of breaking in stock market percentages since the Great Depression, not the Great Recession we had, the Depression of the 30s. Wow, that's what you've got. It's like a non-stop move to the downside. Every argument that's bearish is going on, including now the shutdown by the government and the president of the funding for a number of agencies. But if President Trump doesn't get his money right now, when's he going to get it? He's not getting it January 3rd when the Republicans take over the House of Representatives. So my guess is he's doing pretty much as I wrote in my research, that this is where you were headed, and this is where you're headed. Energy markets, they continue to break down. Grain markets not getting much of a bid. You saw today more buying in the bonds and the notes. Surprisingly, the yen didn't rally dramatically. It was the dollar that came back, and I think it's more thin trade than anything else right now, and that's how you've got to assume a lot of this. When we take a look at the S&P monthly area chart of closes, you do realize the market got to 29.19 just a few months ago, and here we are now at 24.67, almost for all purposes 500 points lower, 20% drop in the market roughly. You see this on a weekly chart from 29.34 on a closing basis all the way down to 24.67 right now. I remember when every break was what was being bought, and I warned everybody. I said, these newer traders in these markets do not understand what happens if the market goes the other way, because for 8 years, had you bought these breaks, all you did was get an immediate reward. You still might get rewarded, but I think the word immediate's out of the equation. When we look at a weekly bar chart, you can see this was the high, and this was your October frame. I said September, but from 29.44 to expect all that, wow, it happened. You're in a bear. You've got the pattern of lower highs. You had a stall this week when you came back up, and I'm going back right through here. And once you cut through that low, it was all over but the shouting, and it just accelerated as you've done. I don't know what the last few days of the year will bring, but just no way to know. Don't know that it's that important. What happened this week is very important. You gave up on the 100-week average of closes, which puts into play the possibility that you go to the 200-week. You often hear people talk the 200-day moving average. Well, the 200-week is really a 4-year moving average, if you think about it. Unbelievable that you might make a run there. You're under the lower Bollinger Band. The market doesn't often spend a lot of time under or above, even in bull runs. So if you had a bet, I'm betting that we're getting closer to the point where at year end we get a spin back to the or the first week of January to spin back to the lower Bollinger Band over here. That's about all that I could say. In fact, I made a bet with one of our guys here about that for the beginning of the year. As we take a look at where we're at in terms of the year-end close, that's it in gold right there. Maybe I should have had a different color, but 26.76. You're now under that by what? We're at 24.57. Wow, that's pretty amazing. Under the band, momentum still down. When I come to the NASDAQ, under the lower Bollinger Band, I would expect it to move to the right of that. Same play there. This market, the FANG stocks aren't down as much as a lot of the others. So I guess in some manner they've done a little bit better. They're not dramatically under last year's close. You can see the Dow 30 it's under also the 100-day average. It's under the Bollinger Band. Now last week, if we take a look where the market finished at 24,113, it was over that lower band. So this is the first move. It went to the 100 and it stayed under that. That's interesting. Now, what will the momentum do next week? I'm going to say in all these that in a week or two I'd expect that they try to get back over that lower Bollinger Band, but that's not bullish. That just means that they're getting back away from being at an extreme. In the Russell, the market's been riding that band down, momentum down, trend down, and this market is down a lot from where it finished. You were at 2017 at the end of, isn't that funny? You were at 2017 at the end of 2017, and you're at 1333. This is down quite a bit. Big break. In the VIX, up and away. Now, we hit 50, remember, back here in February. Right now, you're at 31. That, other than back here, is the highest it's been. So, people, the VIX is back into play. The volatility's back in the market. We see that all day long. In the 10-year notes, you've gone from a lower Bollinger Band to a higher. I'd be a bit cautious here about interest rates able to keep breaking down. I think the pros are coming out of longs against that upper Bollinger Band. In TLT, the first resistance is the closest of the 100-day average or the upper Bollinger Band. I see it there. Yes, the trend is up. The market's got momentum up and bias, but you're in resistance areas. And if the Fed is bent on keeping interest rates higher, okay, what if the president gets some type of deal? What if he gets a deal he can accept on some funding? I don't know that he will. I don't know that it'll even be offered, but we'll see what goes on there. It's almost funny that magically the House of Representatives was giving him $5 billion and the Senate won't give it to him. Wow. If you look at the dollar index, back down this week to the 18-week average of closes and pop from there. What a violent trade it's been, just back and forth and all this, trying to catch a year-end move. And at the eurocurrency, you rallied back to the 18-week average and failed pretty miserably today. Instead of the market able to follow through, for the day, it was completely different in all this. When we look at the British pound on the weekly basis, it's been coming up, but still in a downtrend. The daily chart in the pound looks a lot stronger than the weekly, and the weekly has a lot of resistance above it, but momentum to the downside has waned. Now the problem is, this is December 21st. I think it's January 7th, the next round of discussion for the vote happens. What if they leave without a deal of any type? I can only imagine the chaos, and it's going to be pretty crazy. In the Canadian dollar, still to the downside. Lower highs, lower lows, riding the lower Bollinger Band back to the momentum there, but all the momentum's down. Japanese yen. This is where the Japanese are doing repatriation of money. This market is not up because their stock market's good. Take a look at what the Nikkei's doing. That's not what it is. It's, I've had enough. I'm frustrated. We want our money back on our shore. That's what I think is going on. This is repatriation rally into resistance. It should have a hard time going a lot further than this at this point. But what a swift rise from the 87.60s, 4 cents. I mean, that's pretty big and very dramatic. Bitcoin. On a weekly chart, Bitcoin has finally moved back from under the lower Bollinger Bands. Now, remember what I told you. You're under it there. 2 weeks, 3 weeks, 4 weeks under it. And this week, I don't think it was. 54.50 versus 54.85. It was. So that's your 5 weeks that you were under. You normally don't go 5. So even though you did it, you popped back right afterwards. When you ride these bands, all it means is that the market is telling you it's a very bearish story. The daily chart has had a much more aggressive run on this rally of $600 this week than it looks like on this chart. This is still a very long-term bearish chart, but the resistance number is way up at 5,666, whereas you're much lower than that, about $1,000 or so lower than that on the daily charts for resistance. On the energy market, it just appears that you've got all these ideas as to how you're going to cut production, and there's too much production for world economies that are slowing, for world economies that are unsure as to what's going on, for American production that's never ending. The Saudis today said that they are going to up their production cuts up to 333,000 barrels a day. The problem is the Libyan oil's been off the market for a couple of weeks due to the militants fighting with the government. They're close to a deal. That's 400,000 barrels a day coming back on the market. In any case, you can see that the differential between Brent and WTI has been narrowing. You can see this plunge in this market that almost masks what's going on in the stock markets of the world. Look at how WTI has gone down to $44. Now, what is the cure for low prices? On a chart, the cure for low prices is low prices. Eventually, what happens in the real world, you knock out production. What's the cure for high prices? Further high prices, because you bring on production with high prices. So you'll get to a number here where that will be the case. Is that number now? Nope. You're still in a downtrend. A sign that it's running out of momentum would be getting over 54, 55. Now, from where you're at, that's $9 away. I didn't misspeak there. That's the last rally high on the weekly charts. Momentum's down, price action down. Rebob gasoline. I'm driving this holiday period. I'm pretty happy with what gasoline's going to cost. Look at this move, how it's all locked into the downside. Nat gas, you got to be a weatherman at this time of year to trade nat gas because your short-term forecasts are all over the board. We're in a corrective phase to the downside, but not in a downtrend. You've got lower highs, lower lows, but support comes in around 346. So this market is what we have. It's got divergence. Swing line down, bias up, momentum down. Whole market's fighting with itself. As you can see, they're just open for trading again. You're a little better than where the settlement's going to be, but who knows where you're going to finish up. Want to remind you, and as I leave here now today, for the holiday course special. Normally this course that I've put together runs $149.95. It used to run in the hundreds. Then I lowered the prices, I redid it, and now I'm raising the prices again. So after this $99.95 special, it'll be $169.95 starting Christmas, the day after Christmas. So if you want to take advantage of this, I invite you to. I can teach you the things I'm doing so you can do them on just about any chart you open up anywhere. That's the whole idea. It's 6 hours of videos. You see what I do, you do the same thing. And yes, we'll be using the same data. Then I bring you up to date in the mornings by showing you a current chart, which you also have on your charting software, and I point things out in the morning videos and give you trading ideas there. Of course, I back it up with writing, oral updates. You get everything there. If you want to find out about more on the course, www.iraepstein.com, into the word education. You can call my staff at this number, although most are gone by this hour. Excuse me. Or better yet, you can buy the course, start it whenever you want after the holidays too. You just let us know. In any case, you can click up here to get to it on that. I want to wish you all a Merry Christmas, Happy New Year. We will have videos out this coming week. I'm Ira Epstein. You have a good day.